Hi, I'm Julie Dockin with Watson Realty, and this is Gaye Jones with FBT Mortgage, and I'm here today. I'm going to ask her some questions about home ownership. And so, Gaye, I have 20-year-olds. Three of mine are now in their 20s, and they're friends, and they're starting to buy, or they're starting to get married, really, and they're leaving home. And I know when I talk to them, it seems like there's some insecurity and concern about buying a home.
Fear.
Yeah,
fear
and
commitment.
I just feel like you're the person that can maybe dispel some of that. And I know my daughter, who's going to be buying this year, is really excited about this interview because even she has inhibition about this process.
And I think the schools don't really cover a lot about real life. And in real life, I've been in the industry 30 years. This is the best time ever to buy. I just bought a house because in the last 12 months because it's like it's time now.
Good.
Rates are the lowest I've seen them in over 30 years. And when I first got in the business in the 80s, if you borrowed $100,000, you would pay back $300 over the life of the loan. Now it's less than half, less than two. So that just tells you how low the interest rates are and how much people can afford today.
How important is it to talk to a lender? I know in my business I'll set you up. It's, in my opinion, the first step, just kind of seeing where you're at. So if and when you get a, I'll just let you kind of.
Well, it's like a roadmap. In a perfect world, someone's coming to me 3 to 6 months before they're ready to actually purchase.
Okay.
That way I can pull credit, I can look. Sometimes just another 2 or 3 points might make a difference in an 8 to 4% of their rate. Sometimes it makes a difference on whether they can qualify or not. So I do analyze their credit and see if there's areas that we can improve it, what they qualify for. I go over all the different programs that are available.
You don't have to make this exorbitant amount of money to buy a home. You just need to find a home that's within your price range, and now there are still a lot of homes in the market that are under $100,000 and with 3.5% interest, even 4. You
could today FHA is down to 3.25.
Yeah.
I mean, you can buy a lot of house, and most times if you are buying a home similar to what you're renting, usually your payment's going to be less. There's a lot of and there's a lot of programs available for borrowers, whether it be a 5% down conventional, 3.5% FHA. If you're outside of Duval County or some of the areas of St. John and most of Putnam, there's 0% down money. That's a rural area, so you could get in with no money down.
Because I know, again, the whole FICO score.
Yeah.
Okay, so I know, again, with using one of my children as an example, that when she first consulted a lender, she wasn't ready, but all she had to do was like one simple little thing. And I don't know if you can lay out scores, but I know that that's a big question mark, of what being afraid of what it's going to be, and
it's amazing. A lot of times it is, and it's usually not nearly as bad as they think it's going to be. And we regularly, can do 580, 590, 600. I'll have people call and go, I don't think my score is very good. I don't think I might be 650. That's average for America. That's good.
That's good. I want to interject when you say better rate. You're talking right now at 3, let's say 3.5%, so or 3.25%, so even a better rate, or that it might go up a point. You're talking 4 or 5. It's still interest rates that are
it's still probably
really low.
It's just going to be a little higher.
So that's not even scary.
And that's the other thing people don't realize. When rates are this low, I'm going to take FHA for example. If you've got around a 700 score, you're going to be around 3.25, and then you've got your mortgage insurance, so you're going to be just a little over 4. What that equates to is your loan is a little over $4 per thousand.
Yeah.
So $100,000
Yeah.
loan is like $400
Yes.
plus your taxes
That's what
and
I'm talking
insurance.
about with all these
Or
young
a
people.
$200,000 loan is like $800 and
Yes.
something. But I do, when I'm looking at, especially the young folks and the millennials, you know, they want to go online and do things.
Mm-hmm.
Worst thing you can do. I mean, let's say Quicken.com.
Mm-hmm.
They're going to send it out. 20 people are going to pull their credit. The same when you go shop for a car. If they want to shop for a car, tell them to call their local bank or credit bureau, credit union, and just have one person pull their credit, find out where they are, what they can do, then go find a car. But don't go shopping and let everybody pull it because that pulls their scores down.
Yeah.
Another thing that's crazy is closing an account will hurt their score.
Yeah.
So let's say they pay off one of their credit cards and then they close that account, their score drops. Leave it open. Those are the reasons why they come see a lender first. So that we can say, you need to do this, you need to pay this down, leave that open. Oh gee, you need another line. Go buy some at Kay Jewelers and charge $50, you know, whatever.
Right.
But that's my job, is to prepare them for it.
And you're not scary at all. Well, thank you so much, Gaye.
Thanks for the opportunity. I love working with first-time buyers. I really do, always have.
That's awesome. Me too. All right. Thanks for tuning in. See you next time.